Welcome back. Let's put the spotlight on the commodity markets now. We have Manisha joining in. So Manisha, how are your markets gearing up for Liberation Day? April 2 is almost here.
Well, I'm dressed in that color and my background is that color and it's unstoppable. That's the kind of rally that we've seen in case of gold. There's such strong safe haven buying coming in. If you look at the previous quarter, well, we've seen dollar index decline by more than 4% and you have seen gold prices gain up quite strongly. And you know, it's not just about US where we are trading at around 31.45 right now, but the gold prices have hit an all-time high in US, in India, in China, in Japan, Australia, Europe, and I could just about continue there because we're looking at very strong buying continuing here in various countries there. Well, the markets have seen very strong buying also when it comes to on a quarterly basis. It is all about concerns over the US reciprocal tariffs on April 2nd. The markets also seem to be believing that this is just the beginning, this is not the end, and you will see other countries retaliate and US again talking. So this is going to go on and gold will take support because of that. So after nearly 28% of gains in the previous year, you have seen gold prices gain up by 18% in the first quarter of 2025. And the way the all-time high that we are trading on today as well, it marks 20 days of all-time highs in 2025 till time. Well, the focus is going to be on tariffs going forward. And it also is about China, where many of the insurance industry is now coming in for gold. Remember, out of the 10 insurance companies, 4 insurance companies already have started allocating money in gold in the previous week itself. And that is the kind of gain that you're seeing because of that. Also, the kind of gold flows that we have seen in COMEX have surged, and these numbers will tell the story because in November 2024, it was at around 17 million ounces, and we're looking at nearly 43.3 million ounces on 31st of March. So that's the kind of run-up that we've seen in sense of US as well. Also, COMEX gold stock now equals nearly 5 years of US consumption. And the markets do believe that if the tariffs do not bother so much, then you will see this gold come back in case of UK and Europe, and the prices could see some profit taking. But at this point in time, the banks and brokerages do not believe that. If you look at Goldman Sachs, and that report really came in the previous week itself, they see 3,300 by the end of this year. But they also say that if the scenario is extreme, then you could be looking at gold prices going all the way to 4,500 also. Similar statement from Citi, 3,200 is base case and 3,500 in cents if the investment goes higher. You have Bank of America talking about higher prices in cents of gold. They're talking at about 3,350 in the next year. And then it is also about Bank of America suggesting that the prices will surge if only investment demand increases by 10% in the next 2 years or so. But ANZ, you have De Beers, Macquarie, UBS, those numbers should come in on your screens. And everybody is talking about further all-time highs. $3,200 to $3,500 an ounce by end of this year is what you can expect in sense of gold.
All right, Manisha, thank you very much. So absolute, ripper, 3.5%, 4% in the last 2 or 3 trading sessions, and continues to make all-time highs. We'll take a quick commercial break here. We come back and we will, as the quarter ends, as the financial year is ended and we enter the next one, we'll take stock as far as what the credit quality trends are looking like with CRISIL, CARE and ICRA. That conversation comes up in just a bit.